This is part 2 in a 3-part series where we're going to talk a little bit more about term sheets. And in this section, we're going to discuss the needs of the investor with regard to the term sheet. Now, the structure of capital transactions, such as those that it would involve venture capital, private equity, or even angel investors, are really less dependent on a boilerplate structure and more reflective of the needs and the preferences of the parties that are involved. So you're going to see a lot of differences between term sheets. And you should, at this point, have already consulted with and retained a good, solid securities attorney to get guidance on which suits you best. Ultimately, we can offer some more ideas for you when considering a term sheet. Now, from the investor's perspective, his needs are pretty clear. Of course, first and foremost, the return on investment is what he's thinking about. So you'll see various different items addressing what his expectations are. Also, the risk level that the investor is taking. You'll find some mitigators in there as well. Liquidity is a big concern for the investor, so regardless of what structure you're going with, look for clauses that are going to address his rights to liquidity. Now, your company's valuation at exit, there may be a benchmark set for that. And here's one that you'll definitely see. The investor rights, in the event you're headed for a market liquidity event such as an IPO, the investor is going to want to be first in line to some extent, so look for that. The level of participation in the management of the company. Here's an important one. You want to stop for a second and think about this. Having been on both sides of the table for many years, I can tell you that as an entrepreneur, we tend not to want to give up too much control of our company. Plan on giving some up. You've got to cede some of your control in exchange for this investment, whether it be a seat on the board of directors or voting rights. You will be bringing in a partner of sorts, and he's your financial partner. So take that and keep it in mind when you're negotiating that part. Now, the next item is rights in future rounds of financing. Typically, an investor gets in, whichever type, with the company, and you meet your benchmarks and you do well. They're going to want to be there for you and do what they do best, which is financing. So look for language on that. And opportunities to provide those future rounds of financing, especially with a company that they're already dealing with, are easier for the investor group. So you'll see language on that, and that's a good thing to be negotiating. Now, these term sheets have a lot of subject matter to them, and if you feel that you need some guidance or some advice on that as well, we deal with term sheets all the time, and we've seen this language many times. We'd be happy to help you. Give us a call at the Capital MatchPoint, because that's what we're here for. Ultimately, we want to see you have success with your funding.